Imagine a world where your money is always safe and sound, no matter what happens to the economy. What is the gold-backed currency, and how will it change the world? But before we get to that, let's hit that subscribe button for more content like this. Now let's dive in. Why do we need a new global currency that could possibly change the global monetary system? In a world where monetary systems teeter on the edge of uncertainty, the concept of real money versus paper currency has taken center stage. The global financial landscape is undergoing a tectonic shift, driven by the devaluation of currency stemming from excessive government money printing. In uncertain economic times, the financial world turns its attention to the wisdom of renowned financial guru Robert Kiyosaki. The author of the best-selling book, Rich Dad Poor Dad, has long been an advocate for financial education and intelligent investment strategies. Kiyosaki's views on the upcoming global financial crisis and his preference for tangible assets, particularly gold and silver, as safe havens are becoming increasingly relevant. Robert Kiyosaki has been a vocal critic of the existing global financial system for many years. He has consistently warned of the fragility of the world economy, pointing to issues such as high levels of debt, the devaluation of fiat currencies, and the ever-expanding money supply as potential triggers for a global financial crisis. Kiyosaki's belief is that, with these systemic issues, a significant market correction is on the horizon. In times of financial turbulence, Kiyosaki recommends buying tangible assets like gold and silver as a safe haven. These precious metals have a long history of retaining value, even in the face of economic turmoil. Kiyosaki argues that the ability to hold a physical asset can provide security and protection against the volatility of traditional markets. This video is your roadmap to understanding this monumental transformation, and the significance of buying tangible assets like gold and silver. These elements converge to form the cornerstone of a robust financial education, shaping our investment strategies while offering a glimpse into the potential impacts of global economic changes on the value of the US dollar. The tug of war: real money versus paper currency. In an era where most money exists as digital figures, the concept of real money, backed by tangible assets, versus paper currency, can seem like a distant relic. Gold-backed currencies provide a bridge between the digital and physical worlds, offering a safe haven in times of currency devaluation and economic uncertainty. Why assets that can't be printed matter? One of Kiyosaki's key arguments for investing in assets like gold and silver is that they cannot be printed. In today's world, central banks have the power to create money out of thin air through quantitative easing and other monetary policies. This can lead to inflation and currency devaluation, eroding the purchasing power of traditional fiat currencies. Tangible assets like gold, silver, and even oil are not subject to such manipulation and are thus seen as a more reliable store of value. Excessive money supply expansion. Governments worldwide have turned to their printing presses to fund ambitious projects, stimulate economies, and manage crises. However, the more money floods the market, the more each unit loses its value. The rampant devaluation of fiat currencies erodes the purchasing power of your hard-earned money and savings, sparking concerns of economic instability and a vicious cycle of inflation. While these measures may provide short-term relief, the long-term consequences are alarming. The more currency in circulation, the less each unit is worth. The United States, in particular, faces a dire situation, as it grapples with an ever-increasing national debt. As a result, the government is often left with no choice but to continue printing money. This continuous injection of currency into the system has raised concerns about the sustainability of the US dollar and its future value. Many financial experts argue that the value of the US dollar is on a downward trajectory, and the implications are far-reaching. Golden security. Safe haven in tangible assets. As paper currency falters, investors turn to tangible assets like gold and silver, which have stood the test of time as reliable stores of value. Precious metals act as a safeguard against the devaluation of fiat currencies while retaining their intrinsic worth over generations. Diversifying your portfolio with tangible assets can provide security in turbulent economic times. Financial freedom. Learning and investing. Understanding the intricate relationships between these elements is crucial for a solid financial education. It empowers individuals to make informed decisions about where and how to invest their hard-earned money. Buying tangible assets, diversifying portfolios, and exploring alternative investments can serve as a lifeline in turbulent economic times. In this ever-shifting economic terrain, having a diverse investment strategy can act as a financial safety net. Kiyosaki often emphasizes the importance of financial education and understanding the difference between assets and liabilities. He considers assets to be those that put money in your pocket, and liabilities to be those that take money out of your pocket. In his view, gold and silver are true assets, as they can store and preserve wealth, especially in times of inflation and currency devaluation. The global ripple effect. U.S. dollar's uncertain future. The global economic landscape is a complex web of interconnected factors. Changes in one part of the world can have a ripple effect across continents. As the U.S. debt continues to mount, and as the government grapples with the need to print more money, the value of the U.S. dollar becomes increasingly susceptible to global economic shifts. In this interconnected world, what happens to the U.S. dollar has consequences far beyond American borders. So what is a currency backed by gold? And how will it change the world? A currency backed by gold and silver is a currency that has a fixed exchange rate with gold and/or silver. This means that the government guarantees to exchange a certain amount of currency for a certain amount of gold or silver. Gold and silver are used to back currencies because they are considered to be valuable and scarce commodities. They are also relatively easy to transport and store. The BRICS countries, the acronym for Brazil, Russia, China, and South Africa, have been discussing the possibility of creating a new currency backed by gold and silver. This currency would be used for trade and investment between the BRICS countries, and it would also be used as a reserve currency by other countries. The BRICS countries believe that a gold-backed currency would be more stable and reliable than the US dollar, which is currently the world's reserve currency. The BRICS countries have a combined gold reserve of over 12,000 tons, which is about 30% of the world's total gold reserves. This would give them a strong foundation for a gold-backed currency. Alongside those 5 countries mentioned above, there are over 40 other countries have expressed interest in joining the forum, according to 2023 Summit Chair South Africa. However, there are also some challenges to creating a gold-backed currency. One challenge is that the supply of gold is limited, and it can be difficult to mine and process. This means that a gold-backed currency could be more expensive than a fiat currency, which is a currency that is not backed by any physical commodity. Another challenge is that a gold-backed currency could limit the BRICS countries' ability to conduct monetary policy. For example, if the BRICS countries want to stimulate their economies, they would need to increase the supply of their currency. However, if their currency is backed by gold, they would need to have enough gold to back the additional currency. Overall, the idea of a gold-backed currency is still under development, and it is not yet clear how the BRICS countries would use such a currency. However, the proposal has gained a lot of attention, and it could have a significant impact on the global financial system if it is implemented. The current paradigm shift towards gold-backed currencies signifies a pivotal moment in financial history. Understanding the concept of real money versus paper currency, the perils of currency devaluation, and the importance of tangible assets like gold and silver is paramount for anyone seeking financial security. As we navigate these turbulent financial waters, the choices we make in investment strategies become vital. The potential impact of global economic changes on the value of the US dollar only reinforces the urgency of these considerations. In such times, a well-informed, strategic approach to managing one's finances is not just a choice, it's a necessity. Robert Kiyosaki's perspective on the impending global financial crisis is rooted in his deep understanding of financial education and his belief in tangible assets as safe havens. Gold and silver, in particular, hold a special place in his investment philosophy as they are assets that cannot be printed. In times of uncertainty, Kiyosaki's wisdom encourages individuals to consider diversifying their portfolios with such tangible assets, offering a safeguard against economic volatility and a potential path to wealth preservation. As we navigate the challenges of the financial world, Kiyosaki's words serve as a reminder to educate oneself, invest wisely, and protect one's financial future. Always remember to do your own research and seek a financial advisor's help if needed before making any financial decision. Keep yourself educated and informed. Be sure to hit that subscribe button for more financial education content like this. And share this video with anyone who needs it. Thanks for watching. Until then, stay financially savvy.